Hi, this is Diane Gilson with Info Plus Accounting, and welcome to the Cost of Chaos. What's it costing your company? This is a short video of a topic that I've presented to a number of live audiences, and they always seem to enjoy it, so I thought that I'd share it with you today. When your accounting and control systems are not up to snuff, you may be experiencing any one or more of 9 major symptoms. So let's talk about those. The first one might be lost and wasted time. That can be pretty costly, and we'll talk a bit more about each of these symptoms as we move forward. You might also be encountering some employee attitudes. Or you may be in a situation where you're not using purchase orders and your contractor and supplier costs aren't contained. And when we talk about each of these later, we're going to come up with some dollars that go along with these things and what they might be costing you. Okay, on the job costing side, maybe you don't have accurate job cost reports or they haven't even been established yet. You might be missing discounts or facing excessive fees for accounting or taxes or interest. If you don't have a budget or financial game plan in place, you may also not be achieving some very specific goals that you want to achieve. If you're competing on price, then you may also have some loser jobs in play at this time. You may have situations where change orders are falling through the cracks. Or maybe you can't take on that additional work that you would like to because some of your back office systems aren't up to par. And you might be facing a situation where there's no financial security, no money in the bank, no fallback position for you to go to. Basically, your costs are too high, your income is too low. Now, very few companies have all 9 of those things in play, but it's kind of like when you go to the doctor's office and they say, well, tell us about your symptoms. And if you have more than X number of symptoms, then we have a few things to be worried about. So we're going to talk about this and see if you can find a way to make things a little bit better for yourself. If any of these things are happening to you, you might end up being stressed out, or you might look like this lady who appears to be having an Excedrin headache. Of course, you should be asking yourself, could there be a better way? And if so, what might it possibly look like? So what we're going to do is we're going to utilize a spreadsheet that I put together exactly for this purpose. And what you're going to see here is that we have several columns, and down the left-hand side some major categories of income and cost. So initially you're going to see that this is $1 million company. You might have a $500,000 company, or you may have a $3 million company, but just kind of play along with me here to at least get the impact of what some of these various symptoms that people experience might be costing. And you'll see that we've got payroll and payroll taxes and benefits, trade contractors, materials and supplies, etc. And we have a total set of what I call direct costs or costs of production of about $800,000, and we've got a gross profit of $200,000, leaving us with a 20% gross profit margin. Now this isn't fabulous, but it's not too shabby, kind of middle of the road type of thing. And then from there we subtract out the owner's payroll and payroll taxes, monthly or quarterly accounting fees, tax prep fees, operating costs, etc. That comes to another 15%, leaving us with a net income of 5% or $50,000. Now, in the center set of columns under the bright green header, what you're going to see is what many consultants consider to be the goal for business owners, and that's that business owners should be able to make about 10% of the gross income. In this case, it would have been $100,000, and there should be about another 10% left over for the company. And of course, you'll see that the owner's about $25,000 a year shy on taking out what he or she could or should, and the company is short by about $50,000. We've got a net shortfall then of about $75,000 from what top industry consultants tell us that we should be looking at for this particular company. So let's see what we can do. Lost and wasted time. How is that impacting this company? Well, let's consider the following. What if this company could improve their direct labor performance? So if they were able to convey targeted hours per task, measure results, and hold staff or contractors accountable for reducing errors and meeting goals, what might that extra percentage improvement be? And you'll see here that we have different percentages ranging from 15 to 60 minutes and how those would relate. Now, when I ask live audiences how much time do they believe that their workers are losing per day because of not conveying the targeted hours, not measuring results, not holding people accountable, etc., the answer I typically get is 60 minutes. Now, I don't want to overstate anything for this presentation, so I'm going to pick half that. I'm going to say 30 minutes a day. And if this company could pick up an extra 30 minutes a day from their contractors, they would improve things by 6.25%. That would mean a bottom line impact of $16,875. The next place that I want to take a look at is what if you're not using purchase orders? Perhaps you're overpaying on supplier costs. Now, I know a lot of business owners will say, oh, that's just a big hassle, lots of paperwork. It just doesn't seem like it would be worth it. So let's just take a look and see. So if we use purchase orders to control costs, negotiate your upfront prices, the dates, the quality standards, and then you turn around and document your service or delivery dates, you track costs and hold prices and purchases to budgeted amounts. Now, a lot of these are soft costs because if things aren't nailed down on the front end, it can cause a lot of internal chaos because things aren't delivered on time or they have to be reordered because the specifications weren't quite correct. But I just gave you a couple of examples here. If you started out with an estimated or verbal amount of $3,000 and that bill came in for $31.99, that's actually an increase of 6.63%. Or if your verbal amount was $4,000 and it came in at $4,500, that's a 12.5% increase. So just that part of negotiating it up front, you can see can have a pretty big impact, not even counting all of the extra internal chaos that it can create if things don't arrive as agreed upon. So let's take a look here. And again, I'm going to go a little lower than either of these examples that I'm showing you. I'm going to say, well, what if for our contractors and suppliers we could save 5% annually? Now, a lot of consultants say that that number is usually closer to 7%, but I'm going to go with 5. What's that going to give us? $25,000. Okay, item number 3 on our symptoms list was no job cost reports or ones that are inaccurate. If they're inaccurate, they're just about as good as not having any. And sometimes business owners tell me that lots of times they just feel like they're working in the dark if they don't have those job cost reports. So what we're going to look at here is the concept of implementing job costing reports for you. So the first step I have in here is that you're going to want to calculate your labor burden and include it in your reports and estimates. Now, there's no specific dollar amount that I lay in here for that because if you really know what your burden costs are and so on, that's going to impact your pricing, which we'll deal with a little bit later. But we will look at step B here, and that's enter your estimates, monitor your estimate versus actual, and control your current job costs. Now, what I'm going to drop in here is something that I think is really very conservative, and I'm going to say, what if you could, on your current job costs, by monitoring them and checking them as you go along, if you could get a 2% improvement. And of course, all of the numbers that you're seeing here come off of that front page that we initially looked at. Now then, looking forward into the future, if we could create more accurate price estimates for future jobs so that we could price accurately, I'm going to add the 2% based on our cost, but this extra $16,000 would actually go right on straight through to income. And I just wanted to show you here that we can show you in QuickBooks how to get all sorts of different types of job cost reports. This is an example of one type, but there are many more. Item number 4. Are you missing discounts? Do you think you're spending too much on fees and interest? Well, let's take a look and see what's going on here and look at what could be saved in this $1 million company. So let's say that we could go ahead and monitor and take advantage of contractor and supplier discounts. And I'm just going to put in 0.5%. Okay, just a little tiny amount. That's $2,500. And if we could reduce our outside accounting fees because we had good, clean records to hand off and handle some of these things internally, let's see if we could take those down maybe 30%. And what if we could reduce our tax prep fees? Again, with nice, clean books. I'm not even going to go 30%. I'm going to call that 20%. And you'll see these numbers popping in over on the right-hand side. Almost everybody has a few late payment penalties, but if we've got a good accounting system in place, those should pretty much go away. So I'm just going to drop $200 in here. Okay, maybe a few late payments are going on in this company. I'm not going to worry about any tax penalties. I'm going to assume that they're right on top of doing their payroll taxes and all the rest of the taxes. So of course, if they haven't been, a good clean accounting system is going to help them avoid that. And let's say that we can reduce the credit card or loan interest because the company becomes more profitable because we're cleaning up our operations and so on. So let's say we can reduce that credit card or loan interest. 18% on just $10,000 would be $1,800 a year. So let's just go ahead and drop that in. Okay, symptom number 5 is not having a financial plan or a target to aim for. What might that be costing our company? Okay, well, let's say we create a budget, we monitor our results, and we achieve our goals, and we control our spending. Let's say we could save just $200 a month. Okay, now I don't know any company that I've ever run into that if they really looked at their books and their records couldn't figure out a way to save $200 a month. So let's call that $2,400 a year. Now, in fact, if they establish goals for sales, for gross profit, and net profit, and then they really go for it, this can have a huge impact, but I'm not even going to quantify that amount here. Symptom number 6. What if you're underbidding and you're continuing to work on losers? I thought this was a great picture because it's showing both ends are kind of coming towards the middle, and this person is going to get burned very shortly here. Okay, let's say that you could do better pricing and drop your losers. Kind of a combination. Let's say you've got some jobs that are going as a loss and some other jobs that you're not bidding up quite high enough. And so I gave you examples on the screen. If you could increase your pricing from $14,000 to $15,000, that's a 6.7% increase. From $200,000 to $210,000, that's a 4.8% increase. And if you could do a better job on your pricing, let's say that for this company, we could increase income not by any of these numbers, but just by 3%. We end up at $30,000. Okay, and if you're losing money on change orders, you definitely are not alone. This lost wallet represents money that's just slipping through the cracks in many different companies, because what happens lots of times if you don't have a system in place for employees to report change orders, to document change orders, and to make sure that they're invoiced, it's very common for people to lose a lot of money on change orders, and that all hits the bottom line. So let's go take a look and see what that looks like from a financial standpoint. Let's say that you could just make a 2% difference by spotting and charging accurately for your change orders. Everything got invoiced as needed. We're going to put in 2% on $1 million is $20,000. Symptom number 8. Maybe you can't take on those additional jobs. Now, the fixed price of running a company stays pretty much the same unless you do a huge increase in volume. But that extra job that you take on, whatever the gross profit on that job is going to hit your bottom line directly. And so those additional jobs can really represent the difference between just making it and really making it. Okay, so let's say that you can take on one extra project and it's a nice one, a pretty good sized one, and let's say it's a $200,000 project. Let's drop those numbers in and see what happens. Now, if we stay with the same levels of payroll, trade contractors, materials, and so on, we're going to end up with a gross profit on that particular job of $40,000. Now, we haven't improved any of these percentages from the beginning. Now, of course, we've already talked about how you could probably improve your compensation and so on. And we'll see the end result of this when we're done. Okay, and then another common issue with companies that are just kind of struggling along and can't quite get over the top is that they don't have any stash of cash in the background. And that can be kind of disconcerting. And so let's say that if you could use all your internal systems and start running your company on a more profitable basis, that you would actually have something in the bank. So let's go look at that. So let's say that you had $25,000 in the bank. That's not a whole lot, okay? But let's say you had that much in the bank, and of course we know that interest rates aren't all that great right now, but let's say that rather than paying that interest out, you were actually earning some interest. Wouldn't that be fun? Okay, so let's put in 2% there. Well, it's only going to give us an extra $500, but that certainly is, we could use that for something a lot more fun than just having it fall through the cracks in the floor. So what's our total impact? $173,675. Now, how does that look and how does it flow through? So I kind of redid our financial statement, and I started out with our last year's dollars or budgeted numbers, however. And then we went in and we increased our gross income in a number of ways. We added in extra work. We subtracted out some of our costs based on tighter controls. We came up with a total savings in here up in our direct labor and direct costs of $60,000. We added $160 and so on. So all of these numbers are flowing down through here. We saved about $6,800 on our company overhead. We came up with $173,675, that total improvement. What does it do for what the owner then has available? Well, our income from operations goes from $50,000 to $223,000. That means that instead of 10% to the company and 10% to the owner, which is 20%, we came up with 23.6%, or that $173,675 improvement. Now, a lot of people say, no way, you're not going to add that much money to the bottom line in a year. Well, let's say that you just implemented just a few of these things and you only picked up a third of that or a half of that. Most people would be pretty happy adding that onto their bottom line. So this is a way to quantify how adding internal controls, good information, etc. can really make a big difference to your bottom line. So how do we use QuickBooks? We use QuickBooks to help us put these things in place by establishing the plan. We can use the budgeting feature, we can use the estimating feature in QuickBooks, we can get all of our plans in place. Then we use our accounting system to measure our results and report on our results and create reports to help monitor and measure between our standard, which would have been our estimate or our budget, and our actual. That puts us in a position where, from a control standpoint for the company, then we can either take corrective action or revise our standards. And you'll notice that our arrows are taking us around and around this control loop, so we get better and better at it. And when we can see the difference between our estimates and our actual, and take those corrective steps and put those controls in place, we become better and better and more profitable at what we're doing. It also allows us as company owners, as managers, and so on, to actually manage by exception so that we start to focus our time and energy on the areas that are going to have the biggest payback. We can start to pluck the low-hanging fruit, and once we get that taken care of, then we can continue to refine the operations. But none of that's really possible until we can actually see that objective data, and QuickBooks gives us the tools to let us do that. So, how do we help you from that standpoint? Well, we provide affordable online training workshops and handouts for QuickBooks and enterprise systems, and we've designed these for basic through advanced construction and manufacturing applications. We have more than 60 individual classes that are currently available. You'll find information on the site about those. We also have a subscription-based training program. We call it CAMP. And that includes all of the above workshops, plus additional specialty topics that we've recorded and are only available for the CAMP subscribers. Plus, we offer one-to-one monthly coaching appointments at no additional charge. So you want to read more about that when you get a chance to here on the site. Also, as Info Plus Accounting, we offer individual consulting, use computer to computer throughout the United States, and cover design, training, troubleshooting, and other QuickBooks and enterprise related support services. Additionally, we have a variety of support products like our eCPA labor burden calculator, month-end closing procedures. We have a percentage of completion analyzer and entries for people who need to do those percentage of completion entries. We have a pre-built construction template for QuickBooks. We've got several different things out there that I've developed as a result of working with clients in construction and manufacturing. If you want to learn more about my background, you can go ahead and read about that on the site as well. I'm not going to take up your time right now. I also offer deep discounts on QuickBooks, Enterprise, and other Intuit products, and you can contact us for guidance and or a quote. And additionally, we also help our clients. We come up with recommendations or research for QuickBooks and Enterprise plugins to meet various and assorted specialty needs. So, where are we going with this? Well, when your accounting and control systems aren't up to snuff, it's not just about accounting. What we want to talk to you about is developing systems that ease your burden, make your life better on a day-to-day basis. It's about having accurate, critical, day-to-day information at your fingertips. It's about taking control. It's about a deeper understanding of how you can go about achieving your dreams. We want to give you the tools and the techniques and the methodology so that you can get from your company what you have the ability to achieve. So envision what you need, and we're going to help you get there. Thanks so much. This is Diane Gilson signing off for Info Plus Accounting, and welcome to the Build Your Numbers site. We have a lot of free previews and good information for you to peruse, so please stay on the site and see what you can pick up. Take care. Have a great day.